So what is the difference here between the interest on credit cards and lines of credit versus loans? And if I was to ask you, if you were to borrow money from me and I asked you, hey, would you rather pay 6% or 21% interest rate? Most people would literally just dive right on the 6, okay, simply because the number is smaller. But does that mean that we're actually going to pay less in interest, okay? So again, a critical point to make here between lines of credit and loans. Yes, you have to pay interest on both. Yes, you have to pay interest on lines, but loans have, again, what's called an amortized repayment schedule. They're amortizing the interest. And these are two completely different systems used to calculate interest. Okay, and I'm from Minnesota, so think about the difference between Celsius and Fahrenheit. Okay, so these are both different ways to measure temperature. But did you know that 1 degree Celsius is actually hotter than 32 degrees Fahrenheit? Okay, so even though the number is smaller, okay, it's actually hotter than the bigger number. So when you're thinking about your interest and the difference between lines and loans, think about your amortized interest or anything that's on an amortized repayment schedule. Think about that as Celsius, and think about your regular simple interest on credit cards or on your line of credit as Fahrenheit. Okay, because that amortized interest is much, much hotter and much, much more expensive. Let's take a deeper look at this 30-year fixed mortgage that our average American household has. And what we see here is when you send in, here's your typical amortization schedule. And over the course of 30 years, when you send in that first payment, its biggest portion of it's going to be interest, small portion is going to be principal. And then at the end of the loan, it'll be the opposite. But what we see is on that very first payment of $1,200, only $200 is knocking down the principal. And $1,000 of the $1,200 is pure interest going right to the bank, okay? And understand this, if you're somebody that has a mortgage, okay, and you've been making your payments for years, understand that most people never pay off their 30-year mortgage, right? And why? Typically around year 4, 5, 6, 7, if you've been making your mortgage payments on time, you're gonna get a call from the bank and they're gonna say, hey, we can save you, $75 a month off your payment if you refinance your mortgage, right? And so many people jump on that refinance to save that a little bit on their monthly payment. But what that does is it effectively resets the amortization. Okay, it brings you back to the front end of the loan where the biggest portion of your payment is going to interest right to the bank. The majority of people spend the majority of the time they live in their property in this end of the loan, where the majority of their money is just evaporating right to the bank in pure interest, okay? And here's the bottom line. With this particular loan, over the first 4 years of this mortgage, you will send in $57,000 worth of payments on this loan, and only $12,000 is going to knock down the principal on the loan. $45,000 of that is pure interest going right to the bank. So you might be wondering, is this accurate? And you can definitely, I expect you to do your own due diligence here, but I found this on calculator.net. And you can look at the first 4 years of this amortization schedule. And you can see in the first year, you're looking at $11,900 in pure interest going to the bank. Year 2, $11,700. Year 3, $11,600. Year 4, $11,400. Going right to the bank in interest. Okay, and you're only knocking down the principal by a couple of grand every year. And the bottom line, guys, is over the course of this loan, okay, if somebody did actually pay this off over the course of 30 years, well, congratulations. You'll have paid a total of $231,000 worth of interest on this property. That's a lot of interest, folks. And now that you know, okay, the difference between a line and a loan, and now that you've learned, okay, a little bit more about how brutal amortized interest and amortized loans actually are. Again, student loans work exactly the same. Let's take the next step here in our journey, and let me share with you the #1 wealthy mindset shift that you need to make if you truly want to take control of your finances and navigate this rigged system. And who rigged the system, you asked? Well, we kind of alluded to this earlier, but it's of course your friends over at the big banks and of course the government, right? And we're going to uncover all of that in the very next training.